Hey, Ascension. Bill Schneider here with Michelle Ward. Thank you for the question on appreciated securities. We're going to walk through today a little bit about this giving strategy and why it has some pretty significant benefits that you want to be aware of. It's not everybody, of course, has appreciated securities in a taxable account. So this might not be something everyone can do, but it's certainly something that if you do have that situation, it's very worthwhile. So we thought it might be best to start by walking through a hypothetical example of using this giving strategy. So, and then we'll turn it over to Michelle after that, and she'll tell us a little bit about how her family came to use this strategy. So let's say, for example, that you're a family married couple that earns $100,000 a year, and you are desiring to tithe to Ascension. You don't quite have the cash available to do that, but you do have some stock in a taxable account that you want to use to make this gift. And in this case, the stock is worth about $10,000, so just what you need. And you bought that stock 5 years ago for $2,000, so real nice appreciation on that stock. The question is, do you just sell the stock and then write the $10,000 check to Ascension? Or should you give the stock directly to Ascension? And what's the difference from a tax perspective? And that's the magic we're going to talk about here today. So once again, you earn $100,000 a year. The original cost of this $10,000 stock was $2,000. Because you held it for over a year, you're subject to long-term capital gains taxes, which in your income level would be 15%. And your marginal tax rate is 22% for a $100,000 married couple. So in option one, you sell the stock and then you donate the after-tax proceeds to Ascension. So in this case, you know you're going to pay taxes on it. And a lot of times when you sell stock, you pay taxes right away to keep your account trued up. So you only have $8,800 left after you pay those taxes. Again, the taxes are based on the appreciated value. So $10,000 current value minus $2,000 cost is an $8,000 gain, and that is then taxed at the long-term gain rate at 15%, which yields a $1,200 federal tax bill. Now, of course, at the end of the year, when you go to file your taxes, you will be able to claim the charitable gift deduction for the $8,800 gift, and at your marginal tax rate of 22%, that's a $1,900 benefit on your tax bill. So net, after paying your capital gains rate and getting the benefit of the tax deduction, you have a net tax savings of $736. So sounds pretty good, right? Well, option two is giving of appreciated securities. In this case, you call up your broker or your investment company and you say, I want to move the $10,000 in stock from my account directly to Ascension. And that's really important that it goes directly to Ascension. It can't pass even through your mail. It's got to be directly to Ascension. And all the brokers are used to working with that and they can make that happen. So you give that gift to Ascension, and by doing so, you don't have to claim any long-term capital gains taxes. You don't have to pay any taxes because it's a gift to a charitable, a qualified charity. Additionally, because your gift is now bigger, your deduction is bigger, right? So 22% of the entire $10,000 gift, yielding a net tax savings of $2,200. So in this case, two really nice benefits. One is you're able to give that full amount to Ascension that you wanted to, a $1,200 benefit to Ascension, and you have additional tax savings of $1,464. Now, of course, you always want to consult your tax advisor or investment advisor. It's a little different for everybody, but this is the fundamental way giving of appreciated securities works. So Michelle, that's sort of the math behind it. Is that kind of how you guys see it? And tell us a little bit about your experience.
Yeah, I think it works. It's a win-win for us and the church. I am a finance person, so I used to help clients do this and donate stock to a charity or the church. It's pretty easy. They do most of the legwork, and it's most of the time it might be even free to transfer it because it is a charity. So once we were in a position to do that, we did it too. So for me, investing is and stocks are kind of using my time, talent, and treasure for us, because I spend a lot of time researching stocks and doing things like that. And then so just it makes sense for us. And I think in general, one of the pitfalls that some people have that I've seen firsthand is they just kind of get attached to a single stock. Oh, it's up so much, it's going to go up forever, or it's my company stock. Or I don't want to, it's up so much, I don't want to sell it and pay the taxes. And then, you know, everything has a cycle. And so then when it goes down, you're like, oh no, I wish I would have taken a little of it off the top, that kind of thing. So for me, it's just simple rebalancing the portfolio. Because if you had a stock that even doubled, let's say, your allocations could be a little bit out of whack. So a couple times a year, I look over it where we're at and pick something that's usually up the most and transfer it to the church. So they get, and we get more of a deduction and don't pay the taxes.
Exactly. Yeah, thanks for that. It's a good point that you say, you know, you want to look for those shares that appreciated the most, because you get the biggest benefit of that. And a lot of times, you know, you can tell your broker, or even electronically, if you're doing it electronically, you can automatically choose the most appreciated shares. You never want to do this, obviously, if the shares have lost value, because the opposite effect happens, right? You lose out in the tax game. You also can't do this out of a tax deferred account, so an IRA or a 401k, because if you were to sell those stocks prematurely, you'd be incurring a benefit for taking those out of the account. So this is really an option only for taxable accounts and individual stocks.
Yeah, but I know you're doing the RMD one next week, and I think of our clients, even more people would do it directly out of their IRA than this method. So.
Right. This is the other thing we found about this method. I don't know if you guys do this, but we always do it towards the end of the year. So we're actually doing prepaid giving as well, which is, so we're kind of giving next year in December. And we use this method also just for disclosure. And you know, that's another nice benefit for the church, because they then have the security to know that whatever that amount is that we pledged, it's already in the bank, right? And they have the money, and they have a little more cash freedom. So a lot of ways this can help benefit the church and yourself without any physical dollars out of your hands, right? It's all just stock valuations. So,
yeah.
So let's just quickly recap then the benefits and the specifics of this method of giving. The benefits are really two main benefits. It eliminates the capital gains taxes on appreciated securities, and it allows the donor to deduct the full value of the gift as a charitable gift. And it also gives more flexibility in charitable giving because of those first two things. The specifics, again, consider securities with the greatest appreciation only in your taxable accounts. The gift must be sent directly to the charity. Can't go through your own hands at all, or you'll lose that deductibility, or not deductibility, you lose the ability to not pay taxes. You have to pay taxes on it. And then also contact the church. Amy knows exactly what to do in these situations, and we'll give you the right forms and help you take care of it if you want to do this. Okay?
Good.
Well, thanks, Michelle. I appreciate you being here today.
Yep. Thanks, Bill.
And I hope everybody enjoyed this short presentation.
Thank you.